Today, it's Edwin's Monday evening property rant.
Hello again, it's Martin North from Digital Finance Analytics, where I've made this post covering finance and property news. And it being Monday evening, Edwin is back with me for another property rant. Hello Edwin, how are you doing?
I'm doing a lot better than what you are at the moment, Martin.
Oh, I'm all right. It's my Halloween voice. It's gone down a little bit, but no, it sounds a lot worse than it is. I had lots of people saying, "Oh, you should, not do this, that." I'm fine. I'm just I got a bit of gravelly throat. That's all. So it seems quite appropriate for Halloween.
Yeah, well, Dusty tells me otherwise. She tells me that you've been dancing around, doing all sorts of funny things at Stonehenge.
In the middle of winter. Whoa. Yeah, it's all about frozen assets.
Exactly. Yeah. Anyway, it's crazy stuff. The crazy things, and the world gets crazier. But yeah, look, I might as well let your head down and do something, because it's a shit show out there, and I don't know, it just seems to be getting wilder and wilder. And at the end of the day, we got to bring it all back and see how it's going to affect our property market and the numbers on market.
Well, yeah, and I suppose the question is to what extent the international context does have an impact on the local market. As you said in your show notes, there are bears to be poked left, right, and centre, but it's trying to interpret what that means. And it's just worth reflecting, right? We had, 560,000 new people coming into Australia over the last 12 months. The rental availability, according to PropTrack, came out today, is just 1.1%. And there is less available rentals, as we've been discussing for a long time. So the market is wrecked here in Australia. And I'm not sure that the international context will have a significant impact in the short term, but maybe later. But then, of course, there's other stuff locally too. So wherever you look, there are lots of externalities which could impact the market.
Yeah, look, I guess from my point of view, Martin, is looking at things as they happen, as we've been reporting on the show over the years, and trying to keep the followers, those people that are interested in renting, buying, selling, or just staying put until the wife tells them otherwise. We just chat about what's happening on the ground. But one of the biggest things that I guess I was been thinking about over the weekend predominantly is all these scenarios that are occurring in the abroad. We're going to talk about one in more detail in the WeChat Chatter segment. But this whole thing with the Middle East is really scaling up. The questions that obviously we talk about, our team talks about, is the potential that it has on property prices in Sydney, and I'm just focused on Sydney, obviously, because that's where our base is, and what it all means. We get chatter, obviously, from the WeChat Chatters, what they're doing with regards to abroad, how it's affecting their decisions to come back. We've also got chatter from other media posts and social media that we're on and that we follow, and then we monitor very closely, apart from talking to the local real estate agencies, and that is the inquiry and the appetite for expats that are making back into the Sydney market, and the amount of money that's going to be flowing back into Australia, where you've got very wealthy expats abroad, and that's one of the reasons why they've gone abroad, is to they get paid big bucks over there, and the work's taken them there, lifestyles have taken them there, but now they're really thinking twice about staying in those regions, whether it be your Europe, your Middle East, your Asia, and to an extent Canada and America as well. So then on top of that, we've also got what are the WeChat Chatters? What are the Chinese interests thinking about as well? So all this, as in the prelude, you talked about the effects, the initial effect comes in the effect that's felt more more rapidly is, or it almost automatically is across the rental sector.
Yeah.
Right. And this is where obviously people come in, they park themselves in rental accommodation before they go out and buy, or they buy before they arrive. So there's a lot of pressures. There's a lot of external pressures. There's a lot of poking around internationally. And for me, the question is, how is all that going to translate into future property listings, which then obviously at the moment we're predominantly talking about supply and demand, and the demand is a lot greater than the supply in your Sydney regions, and in many parts of Sydney. Obviously, people are looking more into the areas that they're wanting to buy, they're wanting to settle down into with greater detail. But overall, it's not looking. There's a lot of bears being poked, and there are a lot of things. Nations being poked. So my call still is that we're going to see a retraction in listing numbers. The turtle is going to put its head back in its shell until all this uncertainty passes, and we may go back to 2022 scenario where things started to rise, listing numbers started to rise, then they retracted, then they went back up again, and then they really retracted early this year and into winter. So it's a week by week scenario as far as I'm concerned with that.
Yeah, and it's interesting because the tweet that you posted, I think, underscored a very important point that, on an international basis, you could well argue that Australia is indeed a safe haven. We're a long way from anywhere, and perhaps out of the main road when it comes to some of the things going on. And there is a lot of interest from people looking at Australia, and that, of course, translates directly into more demand for property. So no surprise, really. And if, in fact, at the same time as that, locals then actually turn around and say, well, actually, maybe I won't sell at the moment. Maybe I'll just sit stum and wait and see what happens to interest rates as well as some of the internationals. Those two things collide further.
Yeah, and this is where we've also got we've had a big rise in rentals. I mean, it's only once again the mainstream media just starting to pick up on on two things that we've spoken about months ago. We started speaking about what the WeChat Chatters were telling us, and that is the second wave of buying, and the frenzy into buying in other areas where the chatters wouldn't have touched in previous years. And also with that comes also what we've been discussing about the sleeping tiger. Now it's the sleeping tiger is awake. Now we've got a third group of people which we were talking about. We've alluded to from about, if I recall, about 3 months ago, where we started talking, or maybe even a little bit longer, 3 to 5 months ago, we started talking about how a lot of the ethnic communities were gravitating towards central areas. Were gravitating towards different platforms as well, and talking to agents that speak the language and are of same ethnicity. So there's a lot happening in that, and I alluded in our conversation back then to the to the Vietnamese contingency that we're becoming very strong. Not as strong as the WeChat Chatters, of course, but they are becoming very, very strong. So what you've got now in Vietnam is you've got what they're calling the golden era now for Vietnam, as you saw in the golden era in China, when China opened up its borders to the West, and basically they it was all systems go, and things just evolved and developed from there. Now, with all the issues that are going on in China, now we've got in a lot of main industries jump shipped over to Vietnam from China, and now we're poised at the golden era of Vietnam, Martin. But then again, we brought this to our followers' attention at the beginning of the year. We were talking about it, and we said, watch this space. And now, after meeting with a big group of a contingency of people that are basically selling to, involved in the what we call the new money that is now come about by all this industrial growth and manufacturing growth over in Vietnam. You've got new money, you've got old money. Old money obviously is parked around your Canley Heights, Canley Vales, Cabramatta and that, but now you've got new money. And the new money is interesting, Martin, because we're talking about people coming in with millions of dollars. It's a deja vu of what happened with China and the wealthy Chinese that came over, basically parked the money in affluent suburbs. And, we're talking about in areas where the price points, the land value starts at $3.5 million and up. And they're knocking these houses down to build new homes. And it was rather, surprising. And the areas that the new Vietnamese money is chosen is also very, very interesting. We're talking about your Hunters Hills, Hunters Hills, Glaze Hills, parts of Ryde, Drummoynes, and that whole precinct there. They seem to be concentrating around there. And one individual that we were introduced to, he bought a property for $8.7 million in Hunters Hill. And knocked it down, and now is building a $3.5 million house. Why? Because he can. Because they can, and the students are going to the children are studying in Sydney University, and again because they can. This is the new money. The old money obviously stays over in Cabramatta and those areas, as I said. But it was interesting, Martin. It's going to be interesting moving forward to see what happens there. But what we got told over the weekend is that it's picked up a lot of momentum. There's one individual that actually bought 5 properties in the last 5 to 6 months, and we're not talking about your little your red brick units over at Canleyvale or Fairfield West. We're talking about or Cabramatta. We're talking about properties between $3 and $5 million in around these regions.
Yeah, absolutely. Well, I think it's important, and the international bear that we've been poking is one to bear in mind. But there's also another one, the local bear, and it relates specifically to agent behaviour. And I guess the question you posed in another of your tweets is it cartel behaviour, or is it actually something else? Is there actually a role for licensees in charge to meet and plot and scheme about commissions?
Well, this is the interesting thing, right? I mean, there's the regulations, legislation that governs our industry, but at the end of the day, what everybody or fair trading is so focused on is collusion when it comes to buying properties, but they don't seem to be focused on collusion when it comes to selling properties. But then again, it caught me by surprise what I learned in the past week that was happening in the region in an LGA or across to 3 LGAs of Sydney, and it was rather interesting. I mean, to get 3 agencies or 3 licensees in charge to, first of all, collaborate on any given thing within the region that is of a competitive nature, whether it be property management or sales for that area, is very hard because they protect their patch, very well, or they'll it's all fares in love and property listings, right? So, but this agent from one of the major agencies in Sydney has been able to convince his competitors, competitors being 8 to 10 offices across this region, to actually agree. I call it agree. Others call it collude. To semantics on price fixing the commissions asked by any of their agents within their agency to when they go out to try and get a listing. So it's basically poking fair trading, in the nose, or sticking the finger up fair trading's nose and saying, well, you can get stuffed. We know how to get around these regulations and legislation, because at the end of the day, well, but then again, Martin, I know the question that I asked is it fair? Is it a form of cartel? Well, Dusty and I tend to gravitate towards it being a cartel. but Evan's sitting on the fence at the moment. I don't know what she's thinking, but we think it's a cartel, and it's rather interesting. But again, apart from what's happening, the interesting thing is that this agent has got must hold a lot of power in this region, because he was able to get more than 8 officers and 8 licensees in charge to agree with this. But is it a matter of time before one breaks one breaks, what would you call it, the agreement that they've signed in blood, and and things start slipping away? I don't know.
Well, it does make you wonder about free markets versus not free markets, and I suppose you could argue on one hand that there are some minimum costs involved in setting up an agency and running an agency and doing transactions. On the other hand, particularly at a time when there is a lack of supply, you might see more variation in terms of what agents are prepared to take to go transact. So it does feel a little bit like more of a closed market than it should be at very least, and maybe something more. Maybe it's something that New South Wales fair trading should be looking at, but we know that the history of New South Wales fair trading is pretty abysmal in this regard. They don't really do much at all, as far as I can see.
Yeah, and this is the interesting thing. In other areas of Sydney, we've seen and we've witnessed, and we've also been across agencies and agents that own agencies that I've known for decades, and we get the duck's guts of what's happening there. In some regions of Sydney, you've got agents picking up listings at 0.5%. Because of the nature of the competition that's out there, and vendors, it's a vendor's market. They can choose whatever they want to pay. What the agent does for it is a different story. But then, obviously, there's a counter to that. They might pick up a listing at 0.5%, but they also get hammered on what we call the marketing fee, or the vendor paid advertising fee, which could run upwards of $15,000, $20,000, $25,000 up front. And we know where 50-60% of that goes to. It goes to the agency's pocket, as opposed to really doing genuine marketing for and on behalf of the property that they're trying to sell. So taking all this in mind, it's there are historically, I know in the lower North Shore, in the eastern suburbs, agents have picked up listings at zero commission, but for the vendors' willingness to pay a hefty marketing fee, just because the agents want to have a signboard on the street. And obviously, if you're an agency that doesn't have signboards on the streets, on the local ground, well, you're losing territory, and you're losing your patch to your competitors, and it's a big no-no. So that's what they've done in the past. I'm sure they're still doing it now, but I know that currently in some parts of Sydney, I've been across agency agreements at 0.5%. And there's one that I posted on Twitter not too long ago, where an agent out in the northwest region picked up a listing at zero commission if they failed to get $900,000 for the vendor. But if they got above $900,000 for the vendor on a sale, then it was a 1% commission. Above 950 was 1.5. But that's and the agent took it on. I mean, we're talking about a townhouse. I said to the agent, it's not worth 900. I don't even know why you've been bothered in the first place. No matter how you try to spin it, the market in that area for a townhouse, at the top end, something that's SMIC, the most you're going to get is 820, 830. But they're taking it on again because they want the signboard out in front of the property. They want that. They want to seemingly stay afloat and seemingly have presence and be seen to have listings. But at the end of the day, it's like watching a duck on the lake. They're cool, calm, and collective up the top, but underwater they're paddling like hell.
Yeah, and the more general point, which is just one thing, the scoring, is that the commission rates and charges that agents talk to potential sellers about are negotiable. You know, I'm quite often surprised that people don't realize this. You know, they sort of take it as gospel that this is the sort of the standard, right? No, it's worth understanding that all things are negotiable. I was very fortunate when I actually sold my property in Thurul. You know, I had a strong conversation with the agents, and you know, was able to push the commission quite a long way down because they were quite desperate to get the listing. So it is worth just bearing that in mind.
Yeah, there's different ways. Personally, apart from commissions, and I mean, there are many ways. There are many ways to, and you got to make them work. We put out a podcast years ago when if you recall, I think early 2020, when we were talking about the what agents, what the average property is worth on the market, the average commission at the time, and when you divide it by the average number of hours that an agent spends on selling a property. You know, it all equates to, you know, on or about $1,400 per hour, and those averages haven't changed. They may change slightly a little bit, but not much. So yeah, there are a lot of things that you can make the agent do in order to make sure that you get the best price. But it is what it is. That's it. But now there's a new way that they're trying to stay afloat, and that is by colluding and forming cartels. And it wouldn't surprise me if that practice carried over into other parts of Sydney once the word starts being spread around. But then again, like you said, it's regulators that really have to step in. I only bring it to people's attention. We can make a lot of noise, but that noise doesn't necessarily represent a change in legislation or an enforcement of the current regulations that we have.
Spot on. Well, let's talk about the WeChat Chatters, and I guess we should talk about it internationally first, then locally, and maybe we should also talk about the new Chatterers as well.
Well, the mainland Chinese, and that's something that I put out this, one of the posts today as well. Look, you've got a lot of things happening globally, and one of the things with the Chatterers that they've been speaking about internationally is the heart attack death of Premier Lee. I mean, if people recall our chats, we brought to our followers' attention and viewers' attention, over a year ago or 2 years ago, that Lee pretty much was Xi's worst nightmare enemy, right? So and Lee's pretty much focused on keeping the borders open, keeping the economy open, keeping the walls down, and being open to the West. I mean, Lee's a follower of Deng. Now, with his death, well, then basically Xi, that's it. He's El Supremo. He's the emperor forever. He's that's it. There's no one else that comes anywhere close, or could even step on Xi's shadow. And one of the things that people also got to understand is that Xi is pretty much a follower of Mao. Ruler by force, and raise the walls, which is what we've seen that China has been doing. Started doing just before the pandemic, and he's been doing more so, and he's been an instigator of basically decoupling from the West. And that's why there's been a lot of turmoil. That's why things can turn on a dime, as we've been saying over the weeks, over the months, over the years, because of people wanting to leave, wanting to go, and that. So look, the chatter is run, run joy at any chance you get. And with that, the reflection of how that affects our market, Martin, is basically there's less chance that people are going to be willing to travel back. That Chinese, affluent, high net worth individuals that are basically got the wealth, outside of China, in other parts of Asia. We go back to Australia being the safe haven, and we're going to see, in my opinion, we're going to see more of that wealth, more of that money translating into the affluent areas of Sydney. Been bought up, and we're going to see more of that, which is pretty much what the local WeChat Chatters have been preparing for, and that is the third wave, which we spoke about last week as well. So that's from the international front, so there's no real appetite for anybody. I guess a lot of the chatter in terms of local chatter by way of not the WeChat chatters, but a lot of the social media posts and the conversations had on X and on other platforms, and that is, I know people seem to still believe that the Chinese wealth that's coming into Australia is predominantly coming from mainland China, which isn't. We've discussed that. It's from people that are holding assets outside of China in other Asian countries. You like your Malaysias, your Hong Kongs, your Singapores, your all over Asia, and they just don't feel safe in transferring it back to China, because again, what we've discussed a while ago, and that was because the limits that they have on withdrawing cash on a weekly basis when they're there. So they don't like those sort of controls. Not the wealthy, not the super wealthy. They can and they have. They've already taken the money out, and it's a wait and see to see what happens. How much of that comes back into Australia.
Absolutely, and as you said earlier on, the Vietnamese stories is quite important because they come to this golden age. There's a lot of wealth there, and again, another honeypot potentially coming Australia's way.
Well, that's right. So apart from the local WeChat chatterers that have been poised and been looking at the third wave of buying. I mean, we spoke about the first wave. We spoke about the second wave. It takes the mainstream media 6 to 8 weeks, if not longer, to catch up to what the WeChat chatters are telling is going to happen, and it's really a powerful group of investors that are focused on property that are influencing, in my opinion, a lot of the markets in the Sydney region. And soon to have huge effect in the Melbourne region as well. And when I say huge effect, because the chatter of the local chatterers amongst the local chatterers is get out of Victoria. Get out of Victoria. Sell, sell, sell. If you've got investment properties in Victoria, sell, because the state government policies that they're being dishing out in Victoria, it does not is not supportive of the things that they want to do, is not supportive of what the WeChat chatters want to do with the portfolios, how they want to grow the portfolios, and with all these tax upon tax upon tax and this and that and levies and so forth, the call is to sell. So it's going to be interesting to see what happens on top of the crisis that Victoria are facing with the rental. It seems like they're facing a greater rental crisis than what we are, because a lot of the mainstream media mainly focus in Victoria. So if the local chatterers, among other things, also in conjunction with the Vietnamese chatterers, if they start pulling out in droves out of the Melbourne market, basically selling the properties to the local market, to the local market, to first home buyers or whatever. Well, there's going to be a hell of a lot less properties for rent in Victoria, and the crisis is only going to get worse by the week, or definitely by the month. So it's going to be interesting. So again, the local chatterers are going to be having influences of our markets in Sydney, and I believe that they're going to have a great influence there. Having more properties on the market would be a good thing for buyers that want to get into the market, of course, but not necessarily for the renters, given the amount of immigrants coming into the country.
Yeah, and just going on a bit further about Victoria's housing problem. I mean, they do have a lot of problems, don't they? And there were a series of slides that really sort of underscored it. You know, the home building rate has slumped to its lowest level in more than a decade, with renters increasingly stressed about securing somewhere to live. 80,000 per year, I assume, Edwin, is that the demand?
Yeah, that was what they said they were going to build. They said they were going to build 80,000 per year, and in actual fact, in the last quarter, they only commenced work across freestanding homes as well as apartments. 10,582 by that report.
Yeah, exactly. So there's a words and figures differ story here in terms of what's going on, and that probably helps to explain a little bit the total properties for sale at 25,499. I mean, that's, if you think about 80,000 versus 24,499, Houston, we have a problem.
Yeah, and if you look at the last snapshot there, Martin, it's really to highlight the 3,798 blocks of land that are for sale. Remember how we started tracking that number or looking more closely at that number a few months back, and we said this is an interesting number because I started noticing as I was doing the screenshots on a weekly basis. I try to do it 2 or 3 times a week whenever I can, whenever I remember. And remember how it was growing exponentially in Melbourne. We're trying to figure out, I mean, this is it. I mean, there's a lot of turmoil there. A lot of builders have gone bust and going bust in Melbourne. There's a lot more what would you call it, shenanigans. There's a lot more turmoil. The property industry is involved in a lot more turmoil in Victoria, in my opinion, than what it is in Sydney. Sydney's chaotic for if somebody wants to buy, somebody wants to rent, but Melbourne's got a whole concoction of issues, and it's very, very turbulent. So you've got all these that growth of land available for sale has just been growing. From about 1,700 or 1,800 when I first brought it to our attention, at the beginning of the year to now, it just keeps on growing. It's going to be interesting because nobody wants to build. And now that the WeChat Chatters are pulling out, and the Vietnamese Chatters are close followers of the WeChat Chatters, it's going to be a wait and see, watch this space, and see how quickly that number continues to rise. It really is a watch this space. But then all these policies that the government wanted to throw in, if you recall, there was also a call from the Greens to put rent freezes on and to do this and to do that. All these bullshit policies that don't do anything other than put fear in investors that provide accommodation for renters. And the more investors you have in the market, the more rental properties you're going to have, and at the end of the day, supply and demand again, it's going to cater for cater for a lot more people. But the opposite has happened, and there are a lot of mum and dad investors as well, local mum and dad investors in Victoria that are reaching out, that have DM'd me and sent me messages asking me what I think that they should do because of the there's a bit of a delay in agencies putting in place the full suite of the minimum standard that was brought into Victoria, so that it's almost like they've got a little bit of time to get their house in order. But a lot of them are saying we don't have the money. We don't have the money, and it's going to be yearly ongoing costs, and there's a lot of pressure. So I guess it's not only the WeChat Chatters, but there's a greater voice, and maybe your surveys have started to pick that up. People just wanting to sell for those reasons, more so for those reasons than because obviously the more taxes they pay, the more the less they've got to pay down on their loans as well, right?
Absolutely. Well, I certainly think in my surveys it's definitely influencing the decisions of people to stay or not to stay or to sell. Investors particularly in Victoria. I'll also make one other point. if you look at building construction failures, they're also extremely strong, both in Sydney but also in Melbourne. And so the number of building firms that are actually falling over continues to rise. And that's another factor. So, you know, maybe it's no surprise that we're not seeing as much construction of new build than people would like to, because it's much harder. The costs of borrowing is much higher than previously. The banks are much less willing to fund new construction. And net, it's a mess.
Yeah, big mess, a big mess. And but look, in all that, Martin, I mean, you gotta give it to the government, right? You really got to give it to the government. I mean, the ACT starts pulling back on their property portfolio price rises, and you can't have that with the politicians. So you got to bring in something novel. You got to bring something new and something that's going to compete with New South Wales. We can't let the New South Welshmen get away with it. That Polly said, yeah, stuff that. We need to do something, Martin. So some call it talcum powder, others call it Colombian gold, but it's all legal now, or going to be. I mean, even
Dusty was being a bit naughty here, I must tell you, but it is quite funny. The Colombian and Jamaican embassies have just lodged plans to introduce a convenience store on their premises, wishing to sell traditional cultural gifts to the general public, among other things. As you say, that was Giggly Friday.
But seriously, you got to give it to them, right? Look, the side story is that there's been a few pollies that have been busted, and they just want to quickly get past this through the lower and the upper house, so that the penalty won't be as harsh. That's what Dusty tells me. I don't know if that's true, but you got to ask the question. You got to ask the question seriously. I mean, you can imagine. I posted on Twitter some of the interesting renovations that I've come across over in Epping on the weekend, where you've got an open ensuite onto the fifth bedroom. I mean, literally, it's an open ensuite. I mean, for those that know more about it, you can go to my Twitter post and you can see the video. It's something that I've never seen before. I mean, I have seen it, but not in a house. I've seen it in a massage parlor, but not in a house, right? So it's sort of likened to that. But look, in order to compete with that, Dusty says, well, look, the only way to compete with the innovation of the New South Welshmen builders and developers is, new developments, and have got to have a meth lab. I mean, we're promoting in New South Wales granny flats and teenage accommodation and kiddies accommodation and granny flats. Well, ACT have taken it a step further, because they feel they know where the money is really out in the ACT, and they're catering for new home builds with not a granny flat, not only a granny flat, but also a meth lab or a hydroponics room. I mean, it's a game changer, Martin. I mean, even your post there says it all. I mean, the apartments unit prices have dropped 0.6% in the last quarter. You can't have that.
No, absolutely right. No, spot on. Well, the mind boggles. Why don't we just go on and briefly look at the numbers? I mean, honestly, the numbers, the numbers are the numbers, but really it's hardly worth talking about them, because not a lot is changing. This is the Sydney story, 23rd of October, 17,344. And if we go to the 30th, 17,478. So a very slight uplift, but, it's not moving the needle, is it?
No, and you get a lot of X's and the old Twitterati's and people and that. Yeah, again, they harp on this report by CoreLogic, recent report by CoreLogic and other commentators and people that supply property news to the mainstream media, and they're talking about your 16 and 80% growths. But from where? And what is the 18%? 18% growth in property listings on market from the lowest ever listings on market, since the portals came into their own in the late, in the early 2000s. I mean so we actually went as low as having just a tad over 5,000 homes, freestanding homes on the market in the Sydney region at the lowest point in winter. Yes, and to have 7,687 now, that represents a big jump. Or you could say you've got 17,000, 17,478 listings on the market, but we went as low as 13,900 and something, right? But that, at the end of the day, it's still pittance in comparison to the demand that is out there, in my opinion. And this is where people have got to be careful. What I say to people, what I say to buyers is, use that to your advantage when you're going out and talking to the selling agents. Use it to your advantage when you're going out into, if you're in areas where things have slowed down. Because again, the agents, the selling agents, they are behind us with the information that we give out to our followers and and to the viewers. And I say to people, use that to your advantage, because selling is very emotive and buying is very emotional as well. So if you can use it to your advantage, what we're sharing here, they're just facts. I'm not the one that's dictating how many come on market or how many don't. But you need to translate those percentages into real numbers and put it in comparison. What I have been saying is, being very vocal about it, is like, you and I, and you've been saying, for a very, very long time as well, mate, is you really got to be clinical, and you got to be across what is happening in your locality, in your suburb, in your in your block, even in your street, to be across it. But it is what it is. The mainstream painter paint things with a very, very broad brush. Look, for what it's worth, there are some areas that are coming up, have come up in numbers. They've also gone down in numbers. Again, it's topsy-turvy, but it's just the emotions playing out. Likewise in Melbourne, although Melbourne's being a little bit more consistent with the high numbers. In terms, the high numbers on market, because it's almost twice as many as what we've got here in Sydney, and I think it's only going to get worse for Melbourne moving forward, even when the WeChat Chatters and the and those investment groups start pulling out, because we're talking about big groups collectively in the thousands. Because when the leaders of these groups, when they say jump, they say how high. When they say move, they say how fast. That's how it has been, and I don't see anything different. So I think the numbers are going to creep up a lot in the Melbourne region, and a lot quicker than what they will in Sydney.
Yeah, indeed. Well, we'll certainly see, and I think the Victorian market in particular is one to watch. Interestingly, I had somebody send us a message over the weekend, Edwin, to say they're in Adelaide or in South Australia, and there, in some places, there are absolutely no properties for sale at all. Nothing. Zilch. And I think it's just worth underscoring how there are significant variations across the country. We don't really have the chance in this show to cover all of the domains across Australia. That would take too long. Although I did make a show yesterday and covered some of the national data. But I am seeing it in some other areas where in fact the listings are way, way down, simply because people have just pulled their horns in, as you said, wait and see what's happening. And that means that the listings are just going through the floor.
Yeah, and it all comes back to, I think, a lot of it comes back to the simple fact is, where do they go?
Mm.
Where do they go? I mean, you can't even say, right, I'm going to sell. I need to sell. I have to sell, and I'll just rent. They don't have choice. They don't have a rental choice. it would be a different story if you had a bit of relief there. And again, in these areas, and a lot of these areas, it's not going to get any easier. But if you look at those trends that are happening in WA, Perth. Let's not forget the policy changes in 2019 to the PR pathways into Australia. I mean, you got Perth that got classified as a regional area, and so was Newcastle and Wollongong. So the fix was what was in. The fix has been in, and this is what we've been saying.
Yep.
So this is the thing that you got to look at all this holistically rather than just looking at bits and pieces there. As I said, look, but again, the auction numbers, we're just sharing those because people want to see it, want to hear it. But again, what's happening in Victoria is that the Melbourne Cup, right? So obviously they got the little bunnies down there. Got to have an extra day off for to watch the horses run around. What do they run? 2.5 kilometres or some shit. I don't know.
Yeah, but I thought it was quite interesting that the AFR made a big thing, quoting CoreLogic, that last weekend the clearance rates were significantly below because the number of auctions were up, because the listings were up. And, AFR quoting CoreLogic saying, well, that proves that the market's, going to wobble simply because the existing supply is greater than the demand, etc., etc. So panic, prices might not be growing as fast.
Yeah, well, the thing is that that's on the one hand. On the other hand, you've got reports in the AFR saying that the economists from certain banks are now still calling a 7 to 14% rise in prices over 2024. Whatever the case may be. I'm just sticking to my theories and our logic because it's what's making work. And as I say to people over and over again, and I just shared it earlier on, and that is use the information that we're sharing to your advantage and play on that with the selling agents, because most of them, they don't understand construction, building, they don't understand economics, they don't understand supply and demand. They're just there, pushing pamphlets into letterboxes, and if they get called in, they'll put out a bullshit price to get the listing. And as Tom Pannell says, your priority in the first 1 or 2 weeks of that listing is not necessarily to get the best price for the. Now I'm paraphrasing it, right? Not necessarily to get the best price for the vendor at the auction in the marketing over the next 2 weeks for the auction, but it's really to smash the vendor down and give them all the reasons, take the hope away from them and bring them down to reality. In other words, bring them down to where the price that you should have told them it was going to sell at, was going to be achieved, but that wouldn't have got you the listing. So all these things, so all these AFRs and all these stories and all these people that jump on these different commentators, and I just find it interesting. I just find it as funny, as amusing, and as entertaining as as Tom Panos' weekly update, because he had a I think it was 4 in 11 or 5 in 11 properties sold over the weekend. Now it's doom and gloom. The week before that it was all rosy, and the week before that, I mean, it's just it's really chopping and changing again based on emotion. But emotion is what sells subscriptions to the AFA. Emotion is what we used to say what sells news. But if you take away a lot of the emotion, there are, and you use logic in understanding or how markets are going to move in the short term, in the medium term, and in the long term, well, you can start making some good decisions for your family, or even just to secure a property. That's just, I guess that's just my point of view, and what we've been sharing is really just to help people. We're not telling them to buy, we're not telling them to sell, we're not telling them to get a 3-year lease, we're not telling them to stay on an open lease because there's going to be a whole heap of new buildings being built. We're just sharing data and sharing information. People make up their own decisions.
Yeah, absolutely. But, caveat emptor, always underscore. Let's just quickly touch on the rentals because, the story is still pretty sick. Is Sydney 8635 on the 23rd and 8656 on the 30th. So, well, still, pretty weak and, very worrying in terms of the supply of rentals. And then if you look at the national, it's 39,480 on the 23rd, compared with 49,485 on the 30th. So, yeah, it's not a good story.
No, and it's I think it's only going to get worse. I don't believe it's going to get better. Both Sydney, in the Sydney region, and nationally. It's sad. It's a sad state of affairs. People have stopped looking. They're opting out. You get more and more stories of 10 cities and basically 2-3 families living in homes, and you're going to get a lot more of that. And because again, there are really no options, and the rental prices are starting to point north again. It's just the nature, right? And sadly, it's going to be years before this is fixed. And as you said not too long ago, it's across the board, the property industry, to fix it. It's a generational thing, and potentially we could be looking at decades, if not a whole generation, which is equivalent of 40 years.
Yeah, well, PropTrack again reported, I think, a 12% lift in rental costs. And it's worth just taking that into account because, of course, the inflation numbers were stronger than expected. The retail sales were actually a bit stronger today than expected. And with inflation higher, retail sales still quite buoyant. The probability of the Reserve Bank lifting on Melbourne Cup, which is just over a week away, probably goes higher. I think it was 56% last time I looked. It may be higher now. That's going to put yet more pressure on households. But of course, the critical question here, Edwin, is that higher rates for longer are baked in now. Even the RBA has said that. So what it means is that this market is going to get wrecked and continue to get wrecked for quite some time. And there are no short-term fixes. All of the stuff that they've thrown up against the wall, whether it's shared equity schemes or 5%, whatever it is, none of this is getting to the root cause. And I still come back to my 560,000 migrants into the country in the last 12 months. That's just nuts.
And with so many more construction companies or companies involved with construction in the building industry, being basically taken to the cleaners, and the biggest creditor. The biggest creditor that I've been sitting with these liquidators and that, and they've been sharing a lot of information with us. The biggest, in terms of not necessarily the one that holds the greatest, that's the biggest creditor by way of monetary value, but in terms of the common creditor across. The most common creditor across all these liquidations is the ATO.
Yeah.
And they're basically that they were on pause for the last 4 years, even before the pandemic. They were already at pause in 2019, if you recall. They were basically on hold, holding back on pursuing the debt. They've held, but now with all the expenditure, and I mean, listen, somebody's got to pay for the 20 international trips that Albo and Co Real Estate and Associates have been doing over the last 18 months, right? And there's another one planned for China recently. So somebody's got to pay for that. Somebody's got to pay for the $220 billion worth of that Chairman Dan left the Victorians, and somebody's got to pay for the 60-70% of those the infrastructure works that were in the pipeline that are no longer going to be taken care of in New South Wales. I mean, you got to start raising funds for that sometime soon. You got to start bringing in infrastructure. Whether we go with high towers in the suburbs, or whether we branch out further out west and start carving into flood areas around Windsor and the southwest regions and so forth. I mean, there's still got to be infrastructure, whichever way. Because the immigrations, the immigrants coming in, right? The migrants coming in. So look, no matter which way you look at it, it's got to be paid for. So and the ATO said, right, we're going to start clawing back those debts, and if we're not liquidated, 10 cents in the dollar is better than zero payment. I mean, that's one way, apart from the prices that we're paying for crap out there in way of retail and hospitality.
Yeah, absolutely. And just a couple of other quick observations. The first one, did you see that they just made an announcement over the weekend that they're not going to be allowing 10,000 new homes to be built over in Western Sydney around some areas of Marsden Park and beyond because of flood risk, which I thought was an interesting decision and goes completely counter against what they've done up till very recently, which is completely crazy. And the other observation is the banks have started now advertising, if you're in mortgage stress, talk to us. I think that's a really interesting and important observation. They know that there's a big problem bubbling up.
Yeah, but the banks are obliged to do that. I mean, that was the legislation that got brought in 2010.
Correct. Yes.
That's for that reason. This is where a lot of people get it, in my opinion, get it so wrong with the waiting and the salivating as to seeing mortgagee in possessions, properties that are mortgagee in possession coming on the market. We haven't seen them because there are levers, as we would call it, on the one hand, or there are safety nets that are out there. So really, it's going to get crazier, Martin. It really is going to get crazier by the week, and God forbid if this whole thing in the Middle East escalates and something happens with China as well. It's batten down the hatches.
No, it's a mess, which actually takes us quite neatly to your tip of the week.
Yeah, look, I guess the tip of the week is really eat at home. I was thinking today, what I mean, if I could look at the pandemic from a positive side of things, right? I mean, this is just my thoughts as I drive around Sydney. What could I say that came positive? Okay, one of the positives is that I found that I am a great cook. So because I had to eat at home a lot more and had to come up with better meals. So I'm a good cook. I could almost be tempted to open up a restaurant. Not really. The other thing is I've learned to also cook great meals on a very low budget and I've also learned to eat food home, stuff, homegrown stuff that I really didn't have a palate for in the past. Why? Because it's damn well cheaper to eat at home and have a steak at home, cook it yourself and have it at home and enjoy dinner with Dusty and Evan than it is to eat some shitty food out there where we went into, sometimes we've got no choice. Now, obviously, now that I live in the mountains, we've got no choice, and sometimes we're with clients as well. We eat out and sit down with clients and or associates, and we went to into a club and we all felt like having a steak and shit. I remember going to that club and paying $22 for a steak and salad or steak and veggies, and $54, Martin, and the thing was half the size.
It's shrinkflation, isn't it? It's shrinkflation, and the quality often isn't there either. So I'm absolutely a great believer of home cooking and home growing and home cooking. Not only do you actually use fresher vegetables and things like that, you've got much more control of the supply chain, but actually it tastes better at the end of the day, and you know what's gone into it. It's a win-win-win. And the other point, Edwin, is that it doesn't have to take all day just to prepare a meal, right? It doesn't take that long.
No, it's great. Like I said, I've gone through recipes, made up my own shit, made up my own recipes. I'm my next life. I always said my next life I'm going to come back as a carpenter / plumber, but I'm sort of thinking I might come back as a chef. So I've got an inkling that way. And the third thing, Martin, the third good thing about the pandemic is being that over the last 6 months, apart from the issues with my teeth, hey, look, the cost of buying food out when I'm out and about is so high that I have a lunchbox now that I'm also kept the weight down. So hey, there's some positives about COVID.
Yeah, absolutely. Well, some winners and some losers, but hopefully some winners there. And so the idea of just thinking about home cooking and stocking up and doing those things, I think it's a good advice. And interesting, I do see this in my surveys too, that more people are backing away from eating out as much, and they're doing more home preparation and home cooking, and it can be fun. Can be also a bit of a bind when you have to do it every day, but again, it's about planning. I tend to plan 3 or 4 days ahead and try and do it all together, and then actually just pull it down when I need it. But there you go, that's about being organized. Edwin, I want to say thank you very much for your slides again, and the opinions and views shared today, and we got away with it. The old voice was still there. It's a little bit croaky, but it's still there, so that's good. And I'll look forward to picking up the conversation with you next week.
Most definitely, Martin. Look after yourself, and don't forget ginger tea with a bit of honey and a squirt of lemon.
All right, take care. See ya. Bye.
All the best.